how to protect your assets when banks inevitably fail this year, 2024. Let's talk about it. Hello, everybody. Joe Weber coming at you. And in my last video, I talked about how Jerome Powell came out and said that in 2024, we will see some small to medium-sized banks fail. Now, he just spoke again, and he didn't really bring that up at his March meeting, but I did think he had some pretty incredible things to say. He came out and he said, look, inflation is fine. We're not raising rates. In fact, we will have 3 rate cuts this year. That is huge. That's what we've been looking for. The markets are going to like this. You're going to like it. However, we do have to think about what he said just a few weeks ago when he came out and stated that we will see bank failures in 2024. Now, he did say it's going to be small to medium-sized banks, but a lot of you who are listening right now have your money in small to medium-sized banks. So here's what you need to know about the FDIC, the Federal Deposit Insurance Commission. They are out there to protect you, but you have to follow the rules. Number one, they are only going to insure up to $250,000 of deposits per depositor per account type. Now, here's a list of the account types that they will cover. They'll cover single accounts, they'll cover joint accounts, they'll cover trust accounts, they'll cover CDs, money markets. Those accounts will be protected up to $250,000 per depositor. So if you have money in an individual account and money in a CD account and money in, say, an individual retirement account, you would get $250,000, $250,000, $250,000. And then if you had a joint account, you'd get an additional $250,000 of protection. So make sure if you have any account types in just your name that exceed the $250,000, you take money out of that bank and you open up another similar account at a different bank that has FDIC insurance. And I know you're probably thinking, who has that kind of money in banks? A lot of people right now, when we have trillions and trillions of dollars sitting on the sidelines, especially if you're a business owner. A lot of businesses keep in excess of $250,000. And if you're that business owner and you have more than $250,000 and you're banking at a small to medium-sized bank, you may want to think about just opening up a separate account and moving that money over to another bank to be protected. Now, in the history of FDIC, going back to 1933, they have always paid when a bank fails, and they typically pay the very next day. And I don't see that changing unless we have a massive string of failures. And I don't think we're going to see hundreds of banks fail, but know that if it ever were to happen in the future, if we saw many, many banks fail, it might take the FDIC more than a day to pay you. So that means if you're operating a business and your bank fails, you may not have access to cash the very next day. So if you have assets in excess of $250,000, get different types of accounts, get accounts with joint owners, or open up accounts at other banks. So far, the markets have been very happy with 2024. We see the Dow up over 5%. The S&P and the NASDAQ are up over 10%. Both the S&P and the NASDAQ, and I believe even the Dow, have made almost 2% since Powell's speech, because Powell was so positive about 3 rate decreases in 2024. He doesn't seem to care that we saw both the Consumer Price Index, the CPI, and the Personal Consumption Expenditure Index, the PCE, climb in January and February. He said, look, we know this is going to happen. We're going to eventually get rates to 2%. We're almost there. So he is not thinking about raising rates anymore, and he will be lowering rates this year. The markets loved it. I loved it. This is a boom for the economy. I'm just excited because we could actually see maybe a multi-year gain in the stock market. It's just been so long since we've seen back-to-back gains in the stock market. And with demographics lined up the way they are, what I mean by that is we have about 90 million baby boomers, about 60 million Gen Xers, and then we have 120 million Gen Z and millennials. So you take the 120 million Gen Z and millennials, you add the 60 million Gen Xers, and we finally have enough consumers spending money to replace the retiring baby boomers. This means that we could see some great market returns throughout the 20s. And I said this about 3 years ago on this channel, I said, hey, I think the 20s are going to be a great time. And then what happened? COVID hit, and we had some crazy issues with supply. We saw inflation go crazy, but it all seems to be getting under control. And this could be a great time to be in the stock markets. Now, of course, there's no guarantees about this, so take it with a grain of salt. Don't just go throwing everything in the stock market, but you could have a pretty good return in 2024. If you like videos like this, make sure you subscribe to see future videos. Hit that notification bell to be notified when I release a new video. Leave a comment down below. And as always, I'll see you next time.